You're entering CNBC TV18's Fire Safe Studio, powered by Century Ply, now with firewall technology.
Okay, welcome back. In our continuing focus with regards to what's happening on the hiring front with all that is happening in the startup world, the IT sector, we've now joined by the management of Quest Corp. There is, by the way, a monster employment index which shows that India has registered a 9% year-over-year growth in May, but that there has been a 4% decline compared to last month. So are things slowing down at the margin? Sekhar Garisa is Chief Executive Officer, Asia Pacific at Monster India and Quest Corp. Is joining us to take some questions. Sekhar, great to have you with us here. Thank you very much for your time. We had Mr. Sanjeev Dikshantani yesterday of Info Edge join us around the same time, and he said that, across the board in the startup ecosystem, there is some amount of slowdown which he's seeing. Late stage, early stage, traditional IT services, which are the bulk of the annual hiring numbers. We don't know whether we are starting to see something there, but in all likelihood, it will spread there as well. What are you seeing from your perch? Because the Monster survey also indicates month on month there seems to be a bit of a slowdown.
Yeah. Good morning, and first of all, thank you for having me here. I completely concur with the view that you just mentioned. We've been seeing a lot of headlines about startups laying down, cutting down jobs, not able to raise money. And like always, any news with regards to startups tends to get amplified. But from the perspective that we have of having looked at data across the board, not just startups, across functions, industries, we see that the job outlook is still quite healthy. There's a marginal dip from April to May, but these things tend to happen month-on-month basis. Not reading too much into it yet. From that perspective, we understand that the hiring from startups is low, but from a point of view of how much startups contribute to the overall hiring numbers, it's still very small. So if you're looking at a cross-section of over a few million jobs, the contribution of startups is not that big, and therefore we're not seeing any slowdown from that perspective across the board. So we still are very positive in the outlook. We feel that the job scenario is stable. But at the same time, we can't ignore what's happening from a macroeconomic perspective around us, so we are cautiously optimistic.
But the problem here is that, when some of these larger, well-known startups, Khan Academy, PharmEasy, Cast24, Meesho, these are large startups, right? I mean, when they start laying off in a big way, you just worry about what the next couple of months will be as companies try to reduce their cash burn. Do you think it could get worse before it gets better? And what would the impact be on your business if this escalates further?
I would think so, that we've not seen the worst news from the startup scenario. Many companies are still trying to raise money, and the impact of whether they'll be successful in that endeavor or not is going to show up. But that said, if you were to kind of peel the layers a bit on what's happening with the startups which have already done layoffs, this represents a very small percentage of what their overall workforce has been. So it's natural that when startups try to grow fast, they open up multiple frontiers, new business models, new industries, etc. And sometimes when they feel like they're not getting the traction from fundraise, they tend to pull back on some of their growth initiatives. So we've seen it happen in the past. Startups are now consolidating. There's a bit more focus on scalability, sustainability, EBITDA. People have been talking about responsible growth and growth at all costs, so it tends to happen. There will be a bit of bad news, I'm sure, over the next quarter or so before it becomes better. But I think from an overall perspective, the hiring continues to be robust. We spoke about IT services companies. We have not seen any of our large customers who tend to be them kind of telling us that they're pulling back on their hiring plan. So from that perspective, it's very early to call that it's going to be spread across the board. I think the job market will still remain the same. We might see some tapering down of salary hikes, etc., which honestly may not be such a bad thing for the industry at large. From our business perspective, we continue to be very, very aggressive in our growth, and whatever business acquisition that we've been doing has been growing at a very significant pace. So,
right.
So all good news from that perspective.
All right, Sekhar, you're sounding, like you're leaning more towards the optimistic side, which is not such a bad thing this morning. You spoke about growth. So organic growth, what kind of a number are you looking at? You had told us that quarter one you had started on a good note.
For the year, what kind of an organic growth number are you looking at?
So we are firmly in the phase, last year we reported our numbers where we almost doubled our business, and, we continue to grow very, very robustly. So that's all I would like to say. But this is a space where we know that there's going to be a lot of disruption, which is product-led. There'll be change in business models. I am a firm believer that there is a huge technology disruption that's going to happen in talent management, because today, if I speak to a lot of CEOs, which I do as part of my business, the one conversation I consistently have is that everybody is relooking at their whole talent strategy. And that means people are looking at how do they hire the right skills, assess skills, what kind of modes of engagements are available, full-time, flexi-time, gig, the locational flexibility, how does it impact the cost structures. And to be able to manage all of this complexity, you need the kind of technology and products that help employers be able to access whatever all these opportunities present to them. So from our perspective, we see that this is likely to be a great period for businesses which are in people tech.
Okay. Can you tell us, in terms of your own business, right? We've asked you this actually several times, but does it look even more challenging now to get above that single-digit margin band that you've been trading in? I think for the last many quarters, this 5 to 6% band is what you've been trading in. Does it look like a challenge to get above that?
I think probably the CFO would be able to throw more light, but at an overall level, we're continuously working on that. We have some commitments to the investor community around our return on equity guidelines, which we are firmly on path to deliver. In terms of, to understand Quest, it obviously comprises of a number of businesses. Different businesses have different business models, risk profiles, and margin profiles. So when we peel the onion, we know that there are businesses which contribute better to the margin profile and have been doing robustly. So we remain very optimistic in terms of our growth. We delivered our best ever quarter in the last quarter, and we have no reasons to believe that, it's going to be a continued story from our perspective.
Mm-hmm. Okay, Mr. Garisa, we leave it at that. Thanks a lot for joining us, and all the best for the quarters to come. It looks like it's going to be a tough winter, especially as far as startups are concerned, but as Questcorp is telling us, startups form a very, very small portion of the overall business.
When you look at the market, right, 106, so we're at the high point of the day, 170 points